All right, ladies and gentlemen, welcome to the session here today. I'm Rodrigo, and I'm going to be here with Matt Maley, Chief Market Strategist at Miller Tabak and lead trader at the Benzinga Stock Picks Inner Circle chat room. A lot of you guys already know him from either you see him on CNBC or Bloomberg on some sort of interview. He's been in Wall Street for about 40 years, just for you guys to get a sense of it. So we're going to be getting started soon here. And a quick shout out here. What's up, Kamora, Breeze, Pavel saying hello from Prague. How are you doing, my friend? Tommy, ready when you guys are? All right, man. I started a minute early for you, Tommy. So everybody seems pumped up here in the crowd. I'm excited to bring on Matt. Just a quick intro of what we're going to be doing. We'll be talking about trade ideas, education, not just for options, but about the market, the Fed, inflation, CPI numbers. And we're going to take some tickers from the chat at the end with Matt. So without further ado, let's go ahead and bring on the man himself, Chief Market Strategist at Miller Tabak and lead trader at the Benzinga Stock Picks Inner Circle chat room, a good friend of mine. That is Matt Maley. Let's go. Let's bring him on here. All right. So Matt's in the house.
Hey, buddy, I just clicked it off by mistake there. There we go. How are you, Rodrigo?
Hey, what's going on, Matt? How you been, man?
Well, the markets are crazy. It's kind of weird. The last couple of days especially, it looked like the market was going to get crushed each day, and the market bounced back. And even, we've a couple of people in the chat room were talking about how the market looks like it's it's reacting really good to all this bad news. And I'm like, well, yeah, but actually the market's down this week. It just feels like it's up because it's opened so down so much and then bounced back each time. But the market's still, I think, in shaky ground, but which is actually great for us because it gives us a lot more will give us a lot more opportunities in the coming days and weeks and months, for that matter. And I think we're heading for, as we go into earnings season here, we're going to have an unbelievable amount of opportunities, not only on markets in terms of betting on some moves in the marketplace, but also on individual stocks, because we know we can see these big moves when these earnings reports come out, and this is probably the biggest or most important or most closely watched earnings season of at least the last decade. So it's going to be a hopping time. You think about the summer doldrums we usually run into, but that's not going to be the case, at least not for the next couple of weeks.
Right, good stuff there. We got Jay in the house we got a bunch of chat members here. So big shout out to all you guys. Matt, I know that, typically in the chat room, you're trading there Monday to Friday, 9 to 5. Do you think this is probably going to be the most active week in the chat room that we've had since we started it?
I think next week will be. It could even start. It was kind of weird. The last 2 days we've been somewhat active because of these inflation numbers that have come out this week and the beginning of earnings season. But next week and the week after are really when you're going to see the meat of the earnings season. And that's when I think it'd be almost certainly going to be the most active time frame we've had ever. I mean, we've only been doing it for less than a year, but it'll be probably the most active ever. And again, because in most of the times we'll get a couple of big plays, whether it be on groups, on ETFs, on index ETFs, but these individual stocks which we trade all the time are going to be more so with this because it won't even be just the ones that report, but it'll be other ones within the group that we'll see big moves when those big reports come out. So there's going to be a lot of activity in the next couple of weeks.
Right, and I know that's really your thing. You're Mr. Volatility. I'm watching the chat room very closely because we could get. I mean, I don't know. Depending on the volatility, I'm hoping we can get something like those FXI trades or the Viacom trades, one of those things that are kind of like break the market for a moment,
Yeah, I mean, we've had some really good ones this year, some outrageous ones, which have been unbelievable. We made well over 1,000% in just a few days. But we also had many trades on almost a weekly basis where we've made at least 100%, more than doubled our money, and in many cases 400, 500, 600%. And this kind of happens, pretty much I'd say every week. But we get some of those every week, and I can show you. We'll show you some examples of those as we go through it, so we can back up what we're saying. But the point of the matter is, it's you can't trading stocks is great, but I just think when you get into the options mode, you can really, especially when the market's volatile. It was volatile all year. It's volatility slowed down a little bit before this week, and even early this week, it's starting to pick back up in a big way because of all this these earnings coming out. And there's no question in my mind it's going to be that way for at least the next 3 or 4 weeks. We might get another lull at some point in mid-August, like we usually do, but that's okay, because once we get back into after Labor Day, things are going to kick right back in, and it's going to be a very, very active rest of this year.
Right. So before we do get into this session, which is going to be packed, I promise you, this is going to be like, if you've never watched any of these sessions with Matt, I'm telling you, you will, by the end of this, you'll be a much smarter individual. But Mark, for those that maybe haven't seen you, or maybe watching this on YouTube somewhere else for the first time, if you could give us a brief background of your 40 years in Wall Street. I know you're quite a good track record. I think it's good to know that, considering you are the mind behind the trades, right, in the chat room.
Right. Yeah. I mean, when I spent, almost 40, it'd be literally this Thanksgiving will be 40 years on Wall Street. And I started out, I'm the chief market strategist at Miller Tabak, and you may have seen me. In fact, I was on Bloomberg yesterday afternoon. I was on the worldwide trading on CNBC early Monday morning. So I'm on rather regularly as the strategist there for Miller Tabak. And but the thing is, most strategists, they come from backgrounds of analysts. Now, there's nothing wrong with that, or economists. Again, there's nothing wrong with that. But those people tend to deal in the theoretical stuff and what things should be 3 years from now. And that's great for our long-term portfolios. We all want to have a bucket of our investments that are in the long-term portfolios. But if you want to have another one that you trade in those, you could be a lot more active in active trading, where you really get the big, I don't know who that is, and I'll turn it down. Sorry about that. We get these situations. I mean, that's where the money is made, is when the market is wrong. The market is always right. The market is only always right eventually. So some of these long-term analysts are great because they say, hey, I think this is going to happen over the next 3 years. And that's great for your long-term portfolio. But you get so many times when the market gets out of whack on a shorter term basis. It may just be for a couple of days, but in some cases it can be several months where it gets way ahead of itself or way behind itself. And you can take advantage of those. And that's what I really focus on, because my background was in trading. And I spent the first 25 years of my career, the first 15 was at Salomon Brothers. And there I worked on the trading desk back then. In the 70s and 80s, I was in the 80s and 90s, I was on the trading desk there, covering the institutional trading desks of some of the biggest mutual funds, hedge funds, banks, insurance companies, et cetera. I mean, Fidelity is the biggest mutual fund in the world. I covered them. BlackRock's the biggest hedge fund in the world, covered their desk. So these are the types of things I was doing for 15 years. And back then, Salomon Brothers was at the pinnacle. If you've ever seen the book Liar's Poker, it really tells you about what trading was like back then. But then I moved on to Merrill Lynch, the biggest trading desk, and certainly one of the most important, for another 10 years, not quite 10 years, but almost 10 years. And then when I moved to Miller Tabak to switch more into this role as a strategist, although I continued trading at Miller Tabak. So I've been doing this a long time, and you find out what is going to happen, not what should happen. Because if you're trading, I don't care where the stock's going to go. I mean, so many times when theoretically, I mean, what happened? What was everybody thinking in the beginning of June? Everybody was saying everybody loved the oil stocks. Everybody said, yeah. Everybody was starting to load up on them. Everybody was suddenly overweight the group. This was the absolute, and the fundamental backdrop was fabulous. And I said, I was one of the first guys on Wall Street to turn bullish in October of 2020, almost 2 years ago, for a number of different reasons. And what everybody else was saying, no way, green energy, the fossil fuels are dead. And I was saying, they're not going to be dead, because it's going to take 10 to 20 years to get us to away from fossil fuels. That was a great call. And then when everybody was bullish at the beginning of June, I said, no, we're going to take profits here and we're going to go short. We bought some puts, some put options in the XLE energy stock ETF, and we did very, very, very well. So so I went against what was going on, what everybody was saying on the fundamental side, and looked at positioning and looked at other issues to really take advantage of it. So that's why that's kind of my background. That's why it's worked really well. I don't just do those long-term theoretical BS things. We deal in what's really going on and what's really going to happen.
Right. And, I mean, I remember, look, we've been doing this math for about, well, since I've been here for about maybe a year and like 7 months around there. Like, I remember you were, when everybody else was, thinking we could, like, you were the only guy that was being real about, and there are other people, but I guess like from the people that I saw generally out there, most of them were just saying, stocks are going to keep going up. But I'm, since we do these sessions, you were talking about, Microsoft CEO Nadell, you were talking about margin debt, and I have those sessions like pictured in a moment, like the moment right before everything starts breaking down, and you've been consistent with your calls. The chat members have banked immensely on your calls, and I like it because you also tell them, hey guys, I think we're into some sort of drop in the market. It's time to go light on stocks, heavy on cash to make money on the way down, and buy some good stocks for long term as well, because you do options, but you also help people with stock picking in the chat room, correct?
Right, absolutely. I mean, one of the things right now that we're looking at, and I'm starting to look at it, and we're probably going to pick some literally tomorrow for actual just stocks, common stocks. I'm not going to get aggressive yet, again, because I'm sorry, I'm talking about the energy area. Remember, I was bullish for a long time, turned bearish for a short-term basis. Now it's getting back to a level where I think we're going to start buying them, but I'm not quite aggressive enough. I don't think we have the catalyst yet to get that big jump in the energy stocks. So we're going to pick away from stocks on a longer term basis, individual common stocks that we'll look at and buy. And then as we get later into the month, this is going to be, we're heading into earnings season. We've actually just started today. A lot of these, everybody's been saying the one group that's going to do really well are the energy stocks. Well, and one of the only groups that's going to do well during this earnings season. Well, guess what? These stocks are oversold. They're all down 20% or more. You look at Chevron, the stock's trading at 8 times earnings, has a big fat 4% dividend yield. This one's going to really bounce back nicely at some point. But I'm thinking it'll probably happen. The catalyst will probably be around their earnings. Those earnings don't come for most of the energy stocks, don't come for another 2 weeks. So even though we're going to nibble our way in, I think starting tomorrow, we'll have to look at it and see how it looks in the morning, see what oil's doing. But we'll nibble back in, but we will get more aggressive as time goes on. So that's definitely, we want to play it on both sides, not just the short-term trades that might go 2 or 3 days or a week or more on some of these options trades, and some of them go for a couple of weeks. But we also look at, plays that will last a little bit longer. In some cases, they'll last a lot longer. I mean, Chevron, when I picked Chevron, the stock was yield, it had a 7.5% yield. And I said, let's own this thing, and obviously the stock's up, several 100%. And this is going back further, obviously. And then, but we can trade, now it's up so much, we trade around the position. When it got too expensive, you bought some put options in the stock. So you can trade around them and really the whole thing is maximizing our profits. And we're in a situation of tremendous volatility, tremendous uncertainty. We're heading into a recession. We're probably already in one. But money can be made. The tools are there that we can do that. Individual investors couldn't do that until now. Until recent years, because we have weekly options. We don't have, in the old days, it was only quarterly options. And if you had to go out 3 months on an option, man, you better get that timing exactly right, because if you don't, that time decay is just going to kill you. Now it's like, hey, I don't have to pay for 3 months of time value. I can just pay for 1 or 2 weeks of time value, or even just a few days. You look at the index options, like the SPYs, those things expire 3 times a week, Monday, Wednesday, Friday. So there's all that volatility, actually all that liquidity. These things are all very liquid. And then, I said weekly options in the individual stocks. You have Apple Computer. You don't have to go out 3 months. You go out 1 week or 2 weeks. That's true for all the major stocks, and it's true for the for a lot of the medium-sized stocks as well. So the tools are there. We can take advantage of it. In the old days, you just sat there and tried to weather the storm during times like this. We want to do more than that. We want to profit from this storm.
Right. So make money on the way up, on the way down, and everything else in between. I think that's a great idea. And most people wish they could trade that way, but it just seems, well, I mean, you've been doing this for 40 years. So if I'm talking to everybody who's watching this, if you're struggling in the market right now or anything like that, Matt, if you can pull up the charts, that would be cool, like your trades and all that stuff. Because what I'm going to show you right now, it's basically how Matt Maley has been trading the volatility. And I'm talking about on the way up, on the way down with very, very simple option trades. We're talking buying calls, buying puts. We're not doing anything complicated. This is very simple. So if you're a new options trader, you really should pay attention. Or if you're trading options and you're really not getting the results that you're looking for, just take a look at Matt and his strategy, how he does it.
Now these, can you see my screen now? I just want to make sure you can.
Yeah.
Okay, just hold on 1 second. I'm just gonna load up here. It only take literally 3 seconds or 10 seconds to get these names. And we just want to give you some ideas of some specific trades. And I'll just start with one we did today. Now, I got to tell you, I mean, nobody bats 1,000. Okay, if anybody says they bat 1,000 in the marketplace, they're lying to you. But our whole idea is to get a lot more right than we get wrong, and so we make and minimize. Use good risk management to minimize the losses on the ones we lose. But for instance, this week we made some nice money in. We had some puts on in the or some negative bets, which included the QQQ puts. We had some TQQQ puts, which is the leveraged ETF on the Nasdaq, and then of course we had the SQQQ calls. I was like, wait a minute, those are call options, but they're actually a negative bet because they're call options on an inverse ETF. But the point was, yesterday morning at the opening, people were taking. We took some profits. I held on to some of mine. I wish I hadn't held on as much as I did, but we did take some profits there. This morning on the QQQ options, we made about 80%. We bought some puts right at the end of the day yesterday, and we did it what's called a strangle. We don't do many complicated trades. Usually just puts and calls, simple trades. None of these, exotic condor or whatever you want to say trades. We stick with the easy ones, and it's because that's my area of expertise is key turning points, whether it be short term or long term. And so what we had today, so that's what we did yesterday. Some nice profits there. Then today we had, as the market went down. Again, like I mentioned, we sold some nice profit in the QQQ puts, because that's the ETF for the Nasdaq 100. But we also, as the market was going down, as the market started stabilizing, I'm like, yesterday the market opened down and bounced back. So I'm going to go in, and even though I still own a bunch of negative bets, I'm going to hedge myself a little bit against those bets and buy some calls. So again, this was the TQQQ. That is the 3 times leveraged ETF on the Nasdaq 100. The over-the-counter stocks, that tech-heavy index. And so when we give these trade ideas, we give very specific ones. And here it was, the TQQQ. There's the symbol on the asset we were trying to do. Give the exact expiration date, July 15th, which was tomorrow. We bought, and then of course the strike price, and of course whether it's a call or a put. In this case, it was a call. So we bought these just after 11 o'clock, and we held on to them right until I held on to them until just before 2:30. Made 133%. Some other people, do I have the right ones on there? But anyway, I may have the wrong ones on there. I think we bought the $25.50 calls, but the same percentage gain. But so you can see what I'm talking about here is that we can make these things. I mean, you more than doubled your money. So we lost a little bit of money on the bearish bets that I held on to. Remember, we took some profits in the morning, held on to some of the bearish bets, but made some of that money back by hedging ourselves. And you sit there and you say, well, in the options market, you can make 2 or 3 times your money. In this case, we doubled our money. So that makes up for a lot of losses on the other side, right? And that's what we're looking to do. And so when we get these kind of weird moves in the market where it's jumping all around, we can go in on the other side and hedge our situation, and then make new bets, and then stick with our kind of our more compelling bets on a regular basis. This is another one we had just the other day. We were worried about, again, here this was started last week. We sold them early this week. Again, we try to do this on a consistent basis. This is the TLT. We don't just look at the stock market. This is the TLT, which is the Treasury bond ETF. And we look at we've made some money, and I'll show you what our biggest play was on the FXI, the Chinese ETF on the Chinese stock market, where we made literally 8,000 times our money, 8,000 times our money. We also have done it in the currency, the dollar options, et cetera. So whether it be individual stocks, and I'll show you plenty of examples where we play in those, the index options, et cetera, we can make the plays. But this one, we came in looking for the bond market to rally strongly. I went in exactly the same thing, the exact trade. TLT, that's the Treasury ETF, Treasury bond ETF. The July 15th, that was the expiration date. The $115 calls, that's the strike price, and of course the calls. We came in last Friday at midday and bought those calls. By early this week, 3 days later on a trading basis, 5 days on the calendar, but 3 days on a trading basis. Early in the next on Tuesday, we made almost 300% of our money. So almost four times our money there. 100% is twice your money, 200% is 3 times, et cetera. So we made almost 4 times our money there, and I took the profits. We didn't get the exact low. We didn't get the exact high if you held on a little bit longer. But boy, if you make 280% in 3 days, you should be excited about that. And besides, you might have held on too long and ended up making nowhere near as much money as it sold off later in the day. But again, that was something. So we did some trades late this week. We've done some trades early this week that we made some nice profits on. And then we going back here to last week, where we came in for the wheat. I mean, we go into the commodities market. Now this is wheat. This is an ETF for the wheat. Now I've never traded wheat. I'm not a futures trader. I'm not, a commodities trader, but I do follow the commodities very, very closely. And in this inflationary environment, that's what we try to do. Look at the big picture because it affects the stock market. It affects everything. So what we came in is that instead of trying to go in the futures market and buying wheat futures on the Chicago Board of Trade, we went to the ETF. And we went to the wheat, WEAT, ETF, July 15th. Now, so we bought these on July 6th, but the expiration date, we went out a week and a half. And we might have held it longer, but I was like, we'll see how long it goes. But what I noticed is that wheat, which had gotten absolutely crushed over the previous 6 weeks, was becoming incredibly oversold. It was also, I was looking at sentiment readings, these sentiment readings that I look at that give you how bearish and how bullish people are in the futures pits, or amongst the futures traders. They don't trade in pits as much anymore as they used to. But the point is, we looked at it, and you saw that the bullishness had dropped to like 5%. I mean, there were no bears left. There was nobody left to sell. So I said, we got to step to the plate. We got to really buy these weak call options. It's no matter what you think longer. Besides, I think longer term, with the war of attrition, with the war in Ukraine now becoming a war of attrition, these food prices are going to bounce back. Okay, that war is not going to end anytime soon. These issues are going to stay with us for a while. So we came in and we bought them on the 6th. You see, 3 days later, with for a return of $250%, we sold them out right near the high, right at the very in the high of the day. Now, again, we didn't buy them at the exact low. They traded down a little bit, but a very nice rally. I say, well, geez, you only hold on to them for 3 days. Well, I would have held on to them longer, but I'm like, if you make 250% in just a few days, you can't get greedy. You can't get greedy. And it turned out we got almost the exact top because we rolled back over and it's back down. We're actually going to be looking at that. Probably not tomorrow, but maybe next week again, because again, it's oversold. The sentiment's really bad on wheat. We're going to take another look at this. Now, so it's like, well, wait a minute. Well, I don't want to be trading these bonds and wheat things. I want to be trading stocks. Well, here's another one. So we're just going back to the end of June. Again, each week we're giving ideas. There could be 10 in 1 week and then 1 the next week. But we take what the market gives us. We can't make things happen. We look and see. But again, I don't look at the theoretical stuff. I look at what's actually happening. And so this is what we did here. The same thing in the XLE. Remember I told you about how I turned negative on the energy stocks at the beginning of June. But I saw a very short-term opportunity. I thought it was way oversold on a very near-term basis. So we came in on the 27th of June And even though I was like, oh, I'm still cautious, I don't want to back up the truck and start buying them in a big way, I did see a short-term opportunity. Sure enough, we came in, bought the XLE. Again, these are the stocks. This is the ETF for the energy stocks. The June 30th calls, $74 calls. And, again, we give the exact contract on what to buy. We bought them here. I didn't get them at the low. They dipped a little bit, but that's okay. And we got almost the exact high the next day. And sure enough, they sold off. I'm like, this is a short-term call. Yes, it could go high. I actually did think it would go a little bit higher, but I didn't. I was like, I don't want to take the chance. Let's get out. Again, almost 3 times our money, 186% gain. So that was just, we go, whoops. And then, so this is the point. This is the big ones here. So let's just go back to here. This was June 27th. But remember earlier in the month, I mean, we want to be able to make, take advantage of this volatile times, make money in both directions. Here's the XLE. Now it's the June 17th puts. That was the contract we bought, but we traded it. See down here, it says June 8th, June 9th. So again, we came in at the end of the day on June 8th when the market, remember I told you how I thought it was really, we got to take advantage of this on the way down. Sure enough, the XLE, we bought the put options, came in and bought, again, the XLE, the exact expiration date, the exact strike price, whether it was a put or a call, in this case it's a put. And we bought them here at the end of the day on the 8th. A couple days later, okay, on the 13th, after a weekend, they were up. They were up here in the first half of the day, up over 500%. So I said, what we're going to do, we're going to take half. We're going to take profits on half the trade. And and then it dropped down. I was like, oh boy, I wish I had sold them all. When they rallied back a little bit more, I got them. We sold the rest of them. So I was like, oh geez, yeah, sure. I wish I'd sold them all right at the top. But again, you're never going to get the exact top. I thought they could go up a lot more. But the thing was here, now we were playing with gravy because you're up 500%. We've already made way more than we put into the trade. So now we're just, everything else is gravy. I took the chance that it would keep going. It didn't. When it sold off, and then when it finally bounced back, I said, okay, that's good. Our average on the thing was, over 500% return in just several days. And again, this was the same. We did XLE early in the month on the puts. We bought the calls later in the month, and it worked out extremely, extremely well. Now, again, this is, again, I don't want to go, I'll give you some more examples here, but here's, again, when the markets are really volatile, the SQQQ, again, this is the inverse ETF, the leveraged inverse ETF on the NASDAQ 100, the QQQ ETF. So here, the June 17th, $61 call options. Again, remember, a call option on an inverse ETF is a bearish bet. And sure enough, we bought them on the 10th on a Friday when the market had rallied more than it should have, in my opinion, and looking at the number of different indicators that I look at. And sure enough, the next morning we sold them with a 200% gain. Again, same thing, we sold half, and then later in the day we sold the other half as it continued to go higher with a 270% gain. So, somewhere in about the 235, 240% gain in just one day. This is at the same time, you said, remember I said how the SQQQ SQQQ calls are bearish bet. Well, they're bearish because it's an inverse ETF on the QQQ. Well, at a very similar time, we bought the QQQ July 13th, 285 put options. Again, remember we bought them late in the day. Next day we sold them for a 577% gain. Again, we gave away here. Boy, it would have been 6 or 7 or 800%. But I'm not gonna. If you're mad at yourself when you make 500% or almost 600%, you shouldn't be doing this because you'll just drive yourself nuts. You'll never get the exact bottom. Once in a blue moon, you'll get the exact bottom. Once in a blue moon, you get the exact top. You'll be very lucky if once in your life you get both in one trade. But it's not going to happen. Don't worry about that. You're never going to get it. If you do, it's just luck. As Baron de Rothschild once said, 100 years ago, he was asked, how did you get so rich? He said, because I always sold too early. And I never got greedy. So you can't get greedy. But again, looked like another opportunity there. Whoops, I already told you about those. Let's go here. Whoops, I went the wrong way. Again, now we talk about individual earlier in the month. We go back earlier. AMD, same thing, where we bought some advanced micro devices calls, made 146%. And we bought them one morning, sold them late in the day in the afternoon, 146% gain. Amazon, now this is one that I did not participate in, but people in the chat room did. That's one of the great things about this. There are people in the chat room who get involved in this thing all the time. And they have ideas. It's not just my ideas. And this is one that I said, hey, that's a great idea. But like a dope, I didn't join in on it. And these people bought the Amazon. And what it did is surrounded around the split of the stock. And one of the people on the in the site did the research on it and said this stock usually rallies going into the stock split. And she went in and started buying these options. I told her I did the research after she had mentioned it just to double check because I just like to do that. Everybody likes to do things like that. And she was dead right. And I said I'm not going to make the play. What a dope, because quite a few other people in the chat room did. They sold half of it at 540% gains, and one with 1,500% gains. So again, and again, we could go over ones. These are going back to May. May. Here we are, mid-May in the TQQs. We're going back to early May. Whoops, that was May. We go again in April. Same thing, where we made 200% on those trades. The VIX options, which is the fear index. This was over several days, over a week or so. We made 82%. So again, the whole point is that we do have some big outliers that we'll talk about that we made some huge money on. But the more important trades are the ones that again we do on a fairly consistent basis, and pretty much every week we get some of these big trades, and it really works out to really maximize our profits.
Yeah, and I'm pretty sure many of you guys don't know this, but if you already know Matt, you've been in the chat room and all that stuff, you should know already. Matt Maley has the record in Benzinga for the highest percentage win trade on record, and prior to that, which was that FXI trade, and I don't know if he showed that, and then prior to that, Matt had the record, which was I think a 3,000 to 2,500% on the first half. On the first tranche that he sold. These were puts on Viacom. These are very livid days that I experienced in the chat room and members calling me. So it's really one of those moments. But these, look, once a year, something like that. Those are not like every single day, right, Matt?
Right. But we've been able to get them, and like I said, we made over 1,000%, or some people made over 1,000% on the on those Amazon call options. Here was the one we're talking about. We came in, again, I look at a mixture of things. You see here, this is the FXI. This is the China large cap ETF. So we're looking all over the globe. We're looking for opportunities wherever we can find them. And this one was a situation where, China's stock market, while our market was rallying nicely last year, the China stock market was getting clobbered. They kept coming in and every month they would go over and clamp down on another industry. And then here, early this year, not only were they clamping down, but our government came in and said, or the SEC came in and said, listen, we're thinking about delisting some of these Chinese stocks. Now, forget about this thing that says last weekend's chart, because this chart was made in March. But you can see here that we use the even though all of the fundamental analysis told us that the market was really oversold. I'm sorry, that the market was going lower, that China was having problems. Look how oversold it was. This is what we call a relative strength index, RSI. And when it becomes oversold, it gets down to this green line of 30. And that's green, tells you to go ahead and buy it. And the red line, when it gets above 70, it's red. That's red. Stop. Don't buy anymore. Well, look how oversold it got. 30, it got down to 14. It was the second most oversold I'd ever seen on any asset. And it was the most oversold the FXI had ever been, ever in its history. And then I also looked at Bollinger Bands charts, which I won't go into right now. We can talk about those later, but it basically showed you that it was way more than 2 standard deviations below its recent trading range. So these were all sorts of things we combined. But then I also used my experience, my vast experience, and to know that when markets get really clobbered in China, they come in, the government comes in and supports it. And so I knew this was going to be a bounce. Not only would it be a bounce, not only would it bounce because it was oversold, investors would come in to buy it. It would bounce because the government was going to come in and buy it. I knew that. I just knew that from my past experience. So sure enough, what happened? 27% bounce in one day. 27%, the entire market. It's not one stock that's just announced a takeover bid. It's the entire market at 27%. Look, went over, from way oversold. And what we did when the market was very oversold is we came in, we bought the FXI, March 18th. $30 calls, again, very specific trade. Bought them at the end of the day on March 15th. The next day, they opened up almost they opened up over 1,000% in the green. Now, usually you'd say, hey, don't get greedy, you're up 1,000%. But I was like, no, we don't have to do this because I know that the Chinese government's going to continue to buy it. So when it got up to, 2,900%, almost 3,000%, I said, okay, we got to take some profits here. So we did take half profits on half the position. But again, I knew they would come in. And then at the very end of the day, when the market was just closing, they were up almost 8,000%. I said, okay, I can't get greedy. We got to hold on to these things, which we did. And again, made 8,000. So, between the two, they made about 5,000%. Now, there were some people in the chat room who held on even longer and made over 10,000%. I think one person said they made 14,000%. So do the math. That makes for a good
Right.
So these are the types of things we get every once in a while. And and as Rodrigo mentioned, we also had a situation here, and I'll just show you real quickly. The Viacom trade that we talked about. Now, Viacom, which is now, of course, Paramount, they got caught up in those meme trades. Here we go. The meme trades of the first quarter of 2021. Well, look at again, going back to this RSI chart. See how every time the stock got oversold, it sold off. Look how oversold it got this time. I'm sorry, overbought. Obviously, overbought it. Every time it got overbought, it sold off. Look how overbought it got here. People was a meme stock because it was heavily shorted name, and I just said this is ridiculous. The next day, I was like, first of all, it's a great company, but it's RSI of 95. That's just ridiculous. So we went in, we sold, we bought the puts in the stock, and the stock fell 60. I think it was 60. It was either 62 or 64% the next day. And the options we sold half at 2,500% increase gain, and then the next one with later in the day with a 5,000% return. So these are the types of things that we get every once in a while. We wish we got them every day, but we definitely get them, and they do work out really, really well. Now, this one I do want to tell you though, just so you admit that this was back in March of 2021, and that was when I made that pick in the tier 3 stock pick newsletter that I did.
Yeah.
This was a little bit different, but the point is that these are what we do we're looking for these every single day in the chat. I'm sorry, in the chat room, and we talk about them whenever we can.
That's the benefit of really being there live there. But listen, Matt, my email is getting flooded with a bunch of questions about this chat room from all the viewers. Let's take a quick minute here to answer some of these questions, and then we can dig into the markets. I know that we're both eager to get into it. So yeah, these. By the way, thanks a lot, guys, for sending these questions. I just gathered the most that I saw that you guys sent. So, all right. So does Matt Maley go over the member trade idea suggestions? Yes, that's a regular occurrence. This is pretty normal. An example was that Amazon trade he showed. Are the sessions on Tuesdays recorded? Yes, the session that Matt does every Tuesday with the chat members at 11:30 a.m. all the way till 12:30 or 12. That is always recorded. It's only for the Inner Circle members. It's pretty much a webinar update every Tuesday with Matt live. So that will be recorded, and the members will get full access to that. Good question there, Phil. Then we have, does everybody that joined get a free laptop? Yes. That is, if you join, you have to make sure you join before midnight. Good one. What's the chat room schedule? Joanna, the chat room schedule is Monday to Friday, 9 to 5 p.m. Is there a money back guarantee? Joe, yes, Joe, there's a 7-day money back guarantee. And double question there from Joe, what's the price at renewal? The price at renewal is gonna be the same as today, 1 year from now, which is 70% off, again, until midnight. And does Matt Maley provide education? Absolutely, Mr. Education right here, Matt Maley. So I'll let you expand a little bit on the education side, because I think that's a really important topic. I know that you've done a great job educating your members across the board, because I mean, really hard to look at the news and kind of, make sense of that. So just expand a little on the education side, Matt.
Yeah. And what you mentioned this thing, and I meant to mention this earlier about we have this Zoom call on Tuesday mornings, late Tuesday morning, and we thought it would be something would go 15, 20 minutes and just kind of review the topics of the day. But now it's kind of, and I'm so passionate about the markets, we can get really working into it. I try to keep it to an hour so people don't get too tired of listening to me talk. And I pulled my Bloomberg up like I'm now. We'll be able to go through some live charts today. And we just we do tutorials, just talking about why why people want certain trading strategies and why they work that way. Certain correlations. There's a lot of correlations in the marketplace that don't make a lot of sense to the average person. And again, it's not because average people are stupid. It's just that they just don't work on Wall Street, so they don't know that some of the rules that the perma bulls that there's so many perma bulls on Wall Street. They're just paid to be bullish all the time, and they don't tell you the real rules. And that's why so many traders can make so much money, is because they sucker in the people who don't know how things really play out in the marketplace. So I try to spend a lot of time talking about how the things really work, and how some of the rules that are thought to be commonplace on Wall Street are actually the exact opposite, or if they're not the exact opposite, how they're different, and how people can can profit from them, and profit when we get these divergences. And the key is we talked about whether it be certain technical aspects of the marketplace, and like simple things like sentiment. People talk about sentiment. When I came on Wall Street, they said, "Well, everybody's bullish." I'm like, "Oh, great! It must be going up." And it's like, no. When too many people get bullish, that's actually a contrarian indicator. It means there's nobody left to buy. Same thing on the negative side. When it gets everybody gets bearish, there's nobody left to sell, and so the stock or the group or the overall market bounces. And so we really try to take advantage of that. And then so again, we talk about that. We talk about individual the topics of the day. This week we were talking a lot, obviously, about the upcoming inflation reports, which we saw, and then we'll look, and I'll answer as many questions as I can. It's hard to answer all of them, but I get as many as I can in there. And so it's a thing we do once a week on Tuesdays, and people seem to really enjoy it. It's worked out really, really well.
Right.
And that's the whole point. That's great to give us great ideas, but why don't you tell us why you're doing it so we can learn? That's the key thing.
Right. Education is really important. And then we have Mundo on the YouTube chat saying Matt is the man. Darla Spar, Matt's chat room is great. I'll never trade alone again. His expertise is priceless in this environment. And I think I think Darla really hits the nail on the head. In this environment, you can turn on the news, and they've been wrong 99% of the time at this point so far. And I see you in the chat room. And what I do like, Matt, about your commentary is that you're straightforward with people. You're not biased into any side. You're just about the markets, and you look at it from an agnostic perspective. And I think obviously your 40 years of experience have everything to do with it. But I guess it's really good that people in the chat room have a clear voice, a transparent opinion on your end about the markets.
Yeah, that's the thing. Again, when you get, and I don't want to, markets do tend to go higher over time. It's so they're not lying to you when they say that. But and I've told this story before, but I was a very, very big institution called me, wanted to get talk to me about being one of their strategists, and we did, initially just did a telephone interview, and at the end of it, he was just kind of saying, the job really isn't to strategize the market. It's really just to tell people why they should stay in the market because it goes up over the long term. And it's like, so basically, you just want me to be bullish. Yeah, that's kind of what. I was like, I didn't take the next interview. I just said, well, let's move on from that. That's the great thing about working at Miller Tabak and with Benzinga. When I'm bullish, I'm bullish. I'm bearish, I'm bearish. There was a well-known guy who once said, I don't want to name his name because I definitely heard it secondhand, but from a person who was in the room, a good friend of mine, who said, the strategist at a major firm said, the problem with Wall Street is that for career, for your career, it's much better to be bearish and wrong than bullish and right, because they want people to stay in the marketplace, keep your money in here, don't move it into cash. And I just, and especially in times like this is just not the way to do it. And I was telling people back in December that screaming that, the don't fight the Fed. Everybody's saying don't fight the Fed for 12 years. Now they're basically saying fight the Fed, and look at the markets down over 20%, and then people have lost a lot of money. So I try to be, as you say, I'm agnostic. I want to be, it's just call them as I see them, and that's how you make money, especially in active trading. That stuff. But again, remember what those people are. They are like a salesman. If somebody is working at a Toyota sales, selling Toyotas, he's going to say Toyotas. That's his job. Okay. He may think that a Porsche is a better car, but that's not what he's selling. He's selling it, and that's what these people are selling. They're selling stocks, okay? Or they're selling their bond mutual, whatever it happens to be. They're selling their funds. They always put a bullish spin on everything, and they might say, oh yeah, they give you a few caveats here and there. Just look at what's happened this year. I mean, I've been saying since before this year that we were headed for a deep correction, if not a bear market. And then when we got early into the year, I said it is going to be a bear market. Early in the year, I said it is going to be a recession. What is everybody else on? Well, not everybody. I mean, there's people like Mike Wilson at Morgan Stanley who's been great. He's been spot on. But most of these other guys, and they're saying, oh, well, no chance of a recession. Then they switched to, well, we might have a slowdown, but it's not my base case. Then they said, oh, we could have a recession, but it won't be this year. Then each month they come out with something different. Now they're like, okay, we could have a mild recession. And each time when we're already in the situation that they're supposed to be seeing down the road, then they tell you what's going on. And of course, they'll tell you that it's a bad recession when it's already behind us. So it doesn't help you. I try to give it to you the way it is. And we're going to be buying when everybody else is selling. I guess that is my point at some point down the road.
Right. I mean, ultimately, and that's kind of what it means, right? Like in this environment, which number one, look, a lot of people haven't lived through this sort of inflation, Matt. A lot of people, I don't think anybody maybe has lived through this situation we're in right now, right? We have COVID, which, I mean, these new variants popping every week or two from South Africa. Then we have the Russia thing, which is a factor now that we have there. And I know that you and I have been talking a little bit about the possibilities of the whole Taiwan chip scenario. This is something that, we really don't hear a lot out there, but I guess that's really why people like to come here and listen to you, because you and I can talk about some interesting topics that, we really won't hear much out there, I guess.
Yeah, I mean, it's just like this thing, again, this is not because Microsoft doesn't make chips, but it's obviously a big technology company. I mean, you see the stock right in here, this is the Monday right before Thanksgiving, right here. And guess what the CEO of Microsoft did? And as soon as I saw it, I didn't see it till the next day, but he had sold half of his personal holdings, right? $270 million of his own stock. Then when the stock bounced back here in December, right back to its high again, he sold even more, ended up being 2/3 of his holdings. And he sold, so $374 million worth of stock. People don't do that unless they're worried, unless they see something big coming. If a CEO sells 20 million because he wants to buy a house in Maui, okay, that's fine. That people do that sometimes. You don't sell that kind of size unless it's. And I was pounding the table saying, this is a negative sign. This is not. Mr. Nadella has done nothing wrong. He is a great CEO. He didn't lie to push his stock to too highs. He's done an unbelievable job turning this company around in the last decade. I mean, it was a great company that it fell on, I say hard times, but it had slipped badly for about a decade. He's brought it back into the forefront. So he's done a great job. The stock went up too high because of the Fed provided way too much liquidity for way too long. He saw how expensive his stock was. He saw that the Fed was saying we're going to pull away, that we're going to take away those steroids. And he said, my stock is really expensive. I'm going to sell. Well, guess what? He saved himself $100 million, about $100 million, because he sold here and not down here. Okay. Smart insiders sell. When they sell, you got to pay attention. And we're going to talk about the earnings season in just a minute, because that's also important too. We saw a similar thing in JP Morgan. They report earnings today, but back we had a correction back in 2016. Obviously, we've had other corrections since then, but back in 2016, we had a correction in the stock market, and that was only several years away from the great financial crisis. So people got very, very nervous about the banks, and so back in 2016, and this was it doesn't look like much, but this right here was actually over a 23% drop in the stock. But seeing this decline, well, again, I'm going to blow it up so you can see it a little bit better. Let's see, so you can see
Hey,
it.
Matt, really quick here. Just want to give a shout out here to Cassidy. Welcome to the family for joining here, the Stock Picks Inner Circle chat room.
Thanks for joining. Thanks for joining. Good luck with everything. And I think you're really going to enjoy it starting immediately tomorrow. And it's really going to kick in next week and the week after. It's I'm not just saying that. I mean, we all know earnings seasons are coming. I'm not making, we're going to see a lot of volatility. But anyway, see here, this, it looks, you can see now, it was a pretty decent climb, over 20%. On this day, see this one little thing right there. Jamie Dimon came out and said, I just bought $26 million of the stock. No, not a company buyback. He used his own personal funds and he bought $26 million of the stock. The stock bottomed that day and basically didn't look back for 2 years. Okay. This is when the overall market, this stock was down 20 some odd percent and the overall market was down 15%. Well, a couple of weeks ago, about a month ago, a little over a month ago, when the market was also down 15%, did he come in and buy his own stock? No, he did just the opposite. He came in and said, we got to batten down the hatches because we got a hurricane coming. And so that's a big difference. Okay. So instead of insider buying, he's saying, well, so we got a Microsoft guy selling. And again, the other thing that people are probably really bored of hearing me say who've seen my webinars before, but when insiders sell, what happened in 1999, right before the top of the dot-com bubble? Goldman Sachs sold their company to the public. They've been a private partnership for 100 years. Why did they sell? Because they saw the bubble and they said, we're pulling the plug. All those partners said, we're taking our profits and running. Blackstone, which is one of the best, one of the most important private equity firms, they did the same thing in 2007. The summer of 2007, they sold their stock to the public. Why? Because they saw that it was a major bubble and they bailed. And that's what Mr. Nadella did in Microsoft. And I say major bubble, but he saw that it was going to go down and stay down for a while. And that's what Jamie Dimon, instead of buying, he was warning people. Now, what happened today? This would be a good entry into what we're going to talk about, what's going on in the earnings. Now, the market bounced back nicely after they reported, but it opened lower. Now, they came out. This is significant here. Who has a better view of what's going on in the global economy than J.P. Morgan, the world's biggest and most important bank? Jamie Dimon is the biggest, most important businessman in the world. Okay. And he comes out and says, he did talk a little bit how the consumers in better shape than they were at other times, and that's fine. But he did say he's worried about what the war, inflation, and Fed tightening, and what the impact that's going to have. More importantly, they are adding to their loan loss reserves. They're expecting to have bigger losses in their loans. Who's got a better view of the world than Jamie Dimon? This is a very important thing. And they just had their stress test. A bunch of the banks were talking about raising their dividends and adding to their buybacks. They just halted their buyback. They said, we're not going to buy back our stock anymore. We don't think that's a good use of our money. This is the most important bank in the world. And 5 years ago or 6 years ago, the CEO was buying the stock when we had a correction. This time, they're not buying the stock. They're giving you a warning about a hurricane hitting the global economy. They're discontinuing their buyback, and they're adding to the loan loss reserves. This is the beginning of earnings season, and I think we're going to see more of this as we come along, because if they're seeing it, they've got the best view in the world, and so this is why we're going to see a lot more volatility. All these analysts have sat on their hands for a long time, and they're going to not lowering numbers, which was ridiculous. And I've been saying that earnings had to come down since January and February. We had GDP growth estimates cut by about half, and yet earnings estimates actually went up slightly. It made no sense. So again, this is what Wall Street. It's like, no, we don't want to piss off our clients. We want them to feel happy, and we're not. I say not tell them the truth, but we're not going to lower our estimates. And then after the fact, when it's worthless, they're going to tell it to you. We tell it to you in advance, and that's why what we're trying to work on here. So this is what one of the reasons why I think we still have a lot more volatility, and I think we're going to see lower lows over the coming months.
Right. No, there's definitely a lot of happening in the markets. Matt, let's just talk about the big damn elephant in the room here, CPI. I mean, overall, where do you see things going? I don't see anything positive. I mean, anything that will make me think that we're going in the right direction overall. And I don't know. I mean, it seems like you've been on the spot with this, but these recession, this whole thing, this could last for years, right? And for those guys that are traders, don't worry, because like ultimately Matt banks on the market going up or down. It doesn't matter. But we're just talking from a macro perspective right now, Matt. Like, where do you see this stuff going?
Yeah, the problem is the market is not. People say, look, the market's going down so much, it must have priced in all the bad news. It's like, that's just not the case. I mean, first of all, even without a slowdown, the Federal Reserve with the massive liquidity, they kept their massive liquidity flowing, emergency level of liquidity flowing long after the emergency had ended, emergency had passed. So they pushed assets way above their underlying fundamentals. And so even if the economy didn't slow down, earnings didn't come down, the stock market had to come down to meet the fundamentals. Okay, this whole revalue situation. And now we're moving into the second phase. I've been talking about this for months. Now we're finally getting other people to talk about it. But the fact of the matter is we were trading at 22 times earnings. The only way you can trade at 22 times earnings is if the Fed is providing a huge QE program. Okay, we're not, even if the Fed throttles back on their tightening, we're not going back to 17 times earnings. We're going back to 15 to 16 times earnings, because that is fair value in a regular economy that doesn't, the only time it goes is when you have QE, like we've had most of the time in the last 12 years. Otherwise, we have to come down a little bit. And if these earnings are going to come down, which it certainly looks like they are, but that means it has to go even lower. So I'm thinking the stock market has my kind of, now Bank of America, just all these people, I've been saying 3,500. Well, I've been saying 3,500 minimum, more like 3,200 is my target. I've been saying that for months. Okay, and I said it could even drop as low as 3,000 or even a little bit lower. But now Bank of America, who's like the lowest one on the street now, is saying 3,600. That's the old Merrill Lynch, of course. It's kind of weird. They don't really use the Merrill Lynch name. They've kind of gotten rid of that over the years. Bank of America bought them about a decade ago. But anyway, but my point is that the people are assuming that if the Fed throttles back, we'll just go back to the way things were in 2021. That's not going to be the case, because the Fed is not going to be providing massive levels of liquidity. And the other thing that I would point out is very, very important. Every single time since the global great financial crisis, we have had the stock market, actually, every single time in the last 50 years, okay, every time we've had a deep correction or a bear market like we have now, the stock market has fallen to at least 15 times forward earnings. Okay, at least 15 times forward earnings. Right now, that takes us down to about 3,200, because earnings are going to have to come down. Okay, at least 34, 3,500 on the S&P 500, which is trading at 3,800. But my point is that every single time, so we're trading at 17 times earnings. We got to get to at least 15 times earnings. Not only that, if we go back just a dozen years, every single time the stock market has bottomed, something significant has changed. Now, the Fed, they don't look like they're going to change anytime soon. They might later on, but it isn't until that change takes place. Looking forward, anticipating that change doesn't do anything. You have to have that change. What am I talking about? In 2020, the market was getting crushed until the day the Fed came in and said, we are going to provide massive levels of liquidity to save the system during this healthcare crisis. And the whole global economy was shutting down. The market bottomed. 2018, the market was getting hit, and they kept tightening. But then finally, the bond market started freezing up. So they pivoted. They completely went from tightening to easing. That was a major change, but didn't happen until they announced that they were changing, that the market bottomed. 2011 was the European crisis. The market was down 19%. What changed? The EU, the European Union, announced they were going to bail out Greece, which was really, they were just bailing out the European banks because they were loaded to the gills in Greek bonds. Okay, but when they bailed them out, then it changed. It didn't happen. They were thinking, will the EU bail them out? They might. Until they announced they were bailing them out, the market kept falling. It wasn't until that change was named. And then at the great financial crisis back in 2009, the market bottomed when the authorities finally changed the mark-to-market rule and took that out of the thing. So we are not going to get. We need to get lower to get to the certain valuation levels, and we're going to need some sort of a significant change in policy. Neither one of those have happened yet. So yes, Rodrigo, I think we still have a lot more problems to face. And that doesn't, there's some people calling for the end of the world and where it's going to be Great Depression that lasts 15 years or 10 or 15 years. I'm not saying that. I'm being realistic. Is just saying, just to get back to fair value, we have to go lower, and at least 10% lower in the S&P, if not closer to 15 to 20% lower. And then, but that will provide an unbelievable opportunity. And those who just sit on the sidelines hoping to, and just try to weather the storm, when the market finally bounces after a 30 or 40% decline, every single pop they're going to sell. And what we're going to do, because we're profiting on the way down, is we're going to be the ones buying and then adding after the bottom has been put in. And we'll be the ones, as it's the old saying, but the old Rudyard Kipling, he said, we want to be the guys who are keeping our heads while others around us are losing theirs. In other words, while other people are panicking, we're going to be the ones adding. And it's such a key time, I believe, in the marketplace. Most of Wall Street, all the way down, is going to tell you, don't worry. And then at the bottom, they're going to say, the world's coming to an end, and they're going to say it at the exact wrong time. And people are going to be saying, you're going to be selling at the time they should be buying.
Right. And I mean, I guess the most important thing would be to acknowledge that we have inflation, acknowledge that the CPI number is high, right? I mean, these are real numbers that impact real people. It's not just a number that's printed out, you know what I mean? Like, it's actually something that is really, people are feeling it at this point everywhere. Everybody's talking about the recession everywhere you go. Everybody's, feeling it at this point, I feel, Matt.
Right. And one of the things these people talk about that's so crazy to me is that they say, oh, don't worry, that one well-known person is saying, well, that's going to be the last big inflation number. Or a lot of other people saying peak inflation. It's like, so what? It's like, if you're trying to tell me 6 months from now, inflation is going to go back down to 2% like it had been for the last decade or for the last couple of decades, no, it's going to plateau at a much higher level. Why? Because we are in a supply-driven inflationary environment. And why is everybody compared to the 1970s? Because that's what happened in the 1970s. That was the oil embargo. OPEC had a big oil embargo. They just stopped supplying the world with oil. Okay, so oil prices stayed high, even though demand was falling. It didn't matter. The people they still needed oil. People still need food. They still need oil because of the Russian sanctions on both sanctions. The supply of both of those are going to remain high. And then the third thing, of course, is that we have not, over the last few years, developed the capital investment to be able to pull the oil out of the ground fast enough to add supply. I mean, Biden's over there in Saudi Arabia. That's great, but they are limited to how much they can supply the world. And when you get demand-driven inflation, it's usually good, okay, because people are doing well and they're pushing prices higher because they have better jobs and getting paid more money, so they can afford the higher prices. When you have supply-driven inflation, they can't afford it, and so what do? I mean, what do? They have to buy food. They have to heat their home in the winter, and in many places in the country, they have to air condition their home in the summer. They certainly have to get in the car and drive to their drop their kids off at camp or go to the grocery store. And say, well, then they should have electric vehicles. Well, that's great, but something, oil goes into recharging those electric vehicles. So yes, they're much better for the environment, but they still use a lot of fossil fuels even for those. But the point, I'm not trying to make a political comment here. What I am saying is that these things are going to stay high. Putin is making plenty of money. He's selling his oil at a discount, but it's still at a very high price to China and to India. He's got plenty of money. We're not going to squeeze him out by these sanctions. He's going to try to wait it out. It's a war of attrition. These prices, these things that we have to own. In other words, demand destruction is going to take a lot longer for these things to come down because people have to eat and people have to heat their homes. Okay, so it's going to be with this inflation thing is going to be with us for a while because it is being driven by the same thing that drove it in the 1970s. One last thing, and you can see I'm really passionate about the markets and what's going on. I hate to keep rambling, but one thing we do have to remember. It's going to take a real long time because, yes, Volcker was able to get rid of inflation back then by really clamping down, but we went through 2 minor recessions to get there. Okay, but not only that, it would have taken even longer for Volcker if we didn't have the Iran-Iraq war. The Iran-Iraq war started in 1980, and they started to pay for their war. They started flooding the system. They started selling. They said, "Screw you, OPEC. We've got to pay for our war. We're going to sell our oil," and they started pumping like crazy. Okay, so and again, if something happens where the war in Ukraine shuts down, the sanctions come off, and everything opens back up, I'll have to change my tune. But right now, these East inflation thing is going to be with us for a while.
So I wanted to ask you this other thing, man. I'm just seeing here that Belarus was declared in default by Moody's after dollar payment missed. I also noticed that the euro not only traded with parity on the dollar, but it went below. Last time this was in like early 2000s. You are the global equity strategist here. Like that's what you do at Miller Tabak. You're aware of all these economies and these markets. I guess we are living in historic times, Matt. So I'm really glad that we can be here and I can ask you these questions. What do you think about all that stuff? How could that spill into a bigger could this have a snowball effect?
Well, of course it could. We're worried about, there's all sorts of, doomsday scenarios, but the thing is you don't, and that's what I'm not trying to deal in doomsday scenarios. Believe me, though, there are times I wonder, it's like, oh my gosh, what's going to happen here? And it could really get really, really serious. But even without that, these markets could and should go lower. And you talked about the Belarus, but you mean Europe. I mean, what are they going to do? If Russia does not give them natural gas, they cannot heat they cannot heat their homes. But more importantly, not just as importantly, they can't run their factories. They cannot do what they want to do. And think about, again, that's not just the economy. Food. I mean, food prices are way up. They are going to continue to be high because natural gas is essential to making fertilizer. Okay, and so if you don't have fertilizer, you can't make food. Or what happens is the price of fertilizer goes through the roof, like it did this year, and the price of food goes up. I mean, there was a guy yesterday saying how the turkey is going to cost you 130% more than it did last year at Thanksgiving. Okay, those prices are already set in stone. The prices, wheat's come down, other commodity prices have come down, but they're still. That's the other thing too. Is people, but what are you talking about? Oil's way down, wheat's way down, corn's way down. I'm like, yeah, but they're all 40, 50% higher than they were a year ago. So like I said, inflation numbers are really crazy. They might come down, but they're still going to plateau at a level where people cannot afford to buy anything else but their food. And 64% of Americans live paycheck to paycheck. Okay, how are they going to go out to dinner and go on vacation if it's costing them a lot more to and again, to about more to pay for just the basic necessities? I mean, when was the last time you checked your utility bill? Do you think it was up 11% from last year? Well, mine's up a hell of a lot more than 11% than last year. So a lot of these numbers not even as strong as they should be. So again, it goes back to this issue of stagflation. Okay, stagflation, and where the economy's is going down or slowing, and inflation remains high. That's what happens when it's supply driven. And what does that do? That causes because if today we talk about CPI yesterday, today we had PPI, that's producer price indexes. So that is what the producers charge when they sell their products to the corporation. So it's like, well, wait a minute, if my costs are going up, that means, and if I can't, I've got to pass it on to the consumer. If I can't pass it on to the consumer, which they're not going to be able to for much longer, then their margins gets compressed. They make they make less profits. That means the stock market has to come down more. So the thing is feeding on itself. And again, that doesn't mean that this is much different than being on the brink that we were in 2008 when banks were, were way over leveraged and they're about to implode and the whole system was going to break down. This is just a situation where the market's way ahead of itself. The inflation, stagflation is going to cause things to slow, and the market has to come down to meet it. Time in the 1970s sucked. Believe me, I was in high school back then, junior high and high school, but it wasn't horrendous. We still lived fine. We just didn't, we didn't go out to dinner as much and didn't go on vacations as much, et cetera. And we'll all survive, but the stock market has to come down to a level. And the last thing to mention, again, I get rambling here a little bit, I apologize, but whenever a market becomes incredibly overbought and very expensive and very highly leveraged, like it did at the beginning of this year, whenever it goes down, it goes from overvalued. It doesn't stop at fairly valued. It always goes to undervalued. That's why I say that the market has got to fall to at least 15 times earnings, if not even lower, before this thing bottoms. But that's great, because when you have leverage, when people have too much leverage and they have to unwind it, in other words, they just throw the baby out with the bathwater. Those of us who are not over leveraged and those of us who have some cash on the sidelines, then we come in and swoop in. That's what Warren Buffett has been doing for his entire career. Is when nobody else is able to buy, he comes in, gets great prices. He made Goldman Sachs during the great financial crisis. They sold him some 10% preferred stock, a convertible preferred stock. Okay, convertible preferred bonds. I mean, it's like 10%. You had interest rates at zero, and they're still collecting 10%. They're not. It was a 10-year bond, so they no longer have it. But the point is, like, when you imagine, it's like, oh gosh, we got this convertible preferred whose price is going through the roof, and they're still paying us 10% dividend every single year. That's what Warren Buffett, as much as they say he's not a micro timer, it's exactly what he is. But he times it based on valuations, and when things get ridiculously cheap, that's what we want to be able to do, and that's what we're going to be able to do in the next year or so.
That's what you do every day, man, in the chat room. You're always pumping, banking their trades. I want to give a quick shout out here to my friend that just joined here, Mr. Daniel. Big shout out to you and a big welcome to you, to the family. Let's go.
Thanks for joining, and welcome to the and I'll say this too, and I alluded to it a little bit earlier, is that I'm not the only one giving ideas out there. There are people giving ideas all the time, and they're asking, what do you think of this? And sometimes I'll be honest and say, I don't like that here, or it's just, hey, I like it, but it's not, I'm not quite there yet. Whether it be on the positive side where we should go long or buy calls, or on the negative side where we should take profits or buy puts. But and the other thing too is that there's no such thing as a stupid question. People ask questions. It's not hard. Some of the stuff is like confusing, but as soon as it's explained to you, and believe me, sometimes frequently you have to be explained several times. But it's not like we're doing quantum physics here. It's just a matter of, that doesn't make a whole lot of sense. Explain it to me. Okay, so let's explain it. And people in the chat room, not just me, will explain that, and they'll say, hey, here's a good source to bone up on options trading. Here's a good source to bone up on on other issues that go along. I mean, it's a great community. We have a lot of fun. We bust each other's chops from time to time, make fun of each other in a good way. And it's funny. I go out when I go out and get lunch. It doesn't take me very long to get lunch, but I sit down and unless something really big's going on, I stay away from the chat room for a little while, just so I can look at some things that's going on. But I always say, if I'm going for lunch, for whatever reason, the market always seems to go down. So they always ask me what I'm having for lunch. If I'm having a sandwich, the market goes down. If I'm having pizza, it might be something else. But again, it's just
they don't want you to. They don't want you.
Fun. It's just fun.
Let's just get delivery. We'll all pitch in there, send you some Uber Eats. Gordon has a great question there. How do you call your trades and get them out of the community, Gordon? So Matt has a chat room where he's posting entries, exits, all that stuff. And as soon as he gets into the trade, he'll let you know that. But let's say whenever that's not, let's say you're analyzing the markets, Matt, right? I mean, you have a Bloomberg terminal, so I know that you can literally watch every fly that's moving in the market there, right? So,
right. No, but the other thing too is I should have mentioned this a long time ago. I apologize. Is that we have two pages in the chat room, and one is for the chat room. It's just scrolling down all day long. But when we have this other page, and you just click on it, it's very easy. And it says Matt's important messages, and that's where I put all my trades. I'll also put a few other comments if there's a really important comment or a news story that I'll put there. But the whole idea is that when you're away from your computer and you're not watching, you're doing whatever it might be, and you come back, you can look in that other page and say, oh, okay, did I miss something? Oh yeah, Matt did this trade. Now, you might have come back 2 hours later, and maybe the trade's really not a good one anymore. It's already, hey, you got to buy it here, and the thing just took off, and now it's rallied too much for really to take advantage of it. And you just go into the chat room and say, hey, Matt, you said buy it here. The stock was trading at 52. Now it's trading at 58. Great call, but can I still buy it? And I'll say, yeah, you still can, or no, in fact, I'm about to take profits or something like that. But the point is, when we first started this, it was like, if you weren't there and you didn't see it, you missed it. And then we realized that wasn't working very well. So we put up the second page where you can always go back whenever you're away to make sure you see exactly what we're doing on any given day.
Right. And I mean, keep in mind, we're trading like contracts that expire near term. So these move pretty fast. And if you want max profit, minimum loss, I really think you should be in the chat room, because if the market can move 1%, but the calls will move a ton more, right, Matt? So
That's the whole thing, is that if the market is boring, and I'll tell you, if we get in, it could happen. I mean, say the third week in August. Let's say we get into the third week in August, and the market's settled down, and no earnings are coming out, and everybody's on vacation, and the market's not moving. There's not much volatility. We're not going to do many trades. I mean, I'm not going to do it just to do it. I don't make any money if you trade a lot. Benzinga, nobody makes any money. That's not what we're here for. You can do a gazillion trades or no trades. That doesn't make any difference to me. We're not churners. We don't, some brokers, they'll try to get you to churn your account so you pay more commissions. And of course, nowadays they don't really pay commissions for stocks, but you do for commissions. I'm sorry, you do for options. Although those options commissions are so much way down from where they used to be. But my point is that if they're not there, we won't do them. But when they are there, I really think there's going to be a lot of them in the next 6 weeks. We're going to be very active, and if you're in there, I think you're going to see some real, not just ideas from me, but from other people who are watching the markets just as closely as I am.
Right. Interesting. So, Matt, remember we talked last time about Bitcoin? Yeah. So, I mean, what's your honest take on Bitcoin, man? Like, let's just be real here with the folks,
Well, I mean, the thing is, longer term, it's going to be fine, but longer term, Amazon was fine, but it went down 90%. Now, I'm not saying Bitcoin's going to go down 90%, but during the dot-com bubble crash, Amazon, which the best certainly one of the best internet company, fell 90%. Now, and so what's going to happen with these is that just like the internet companies, most of them are going to go out of business, and the ones that survive are going to do very well eventually. But the one thing I'm looking at right now, and I'm just going to pull up a chart. It's called the MACD chart in Bitcoin. See how this thing. I have another chart, but I'm going to pull it up here. But see how it was kind of sideways here in April and early May, and then fell. Sideways here, fell. Now we're sideways again. Is it going to fall? I don't know. But look at this MACD chart. This is what's called, and what this does is it measures the 9-day moving average, 9-day exponential moving average versus the 12-day. And whenever the 9-day crosses below the 12-day, it's negative. It kind of confirms a short-term change in trend. And whenever it crosses the positive side, it tends to confirm a short-term positive change in trend. But look now, we're getting very close to another negative cross. So I'm worried that we're going to get another downward leg at some point soon. There are people, we talked a little bit recently, Rodrigo and I just talked about, could it go to 10,000? Sure, it could. I'm kind of thinking it doesn't get that low. Jeff Gundlach was one of the smartest people on Wall Street. That's his target. So that he's a smart guy, so you want to pay attention to it. But I just think that the key thing about Bitcoin is that it was great. It is good. And I think Ethereum's even better. And there'll be others that will survive and they will prosper. But the problem is they got pushed up way too much by that Fed's liquidity program. And people no, it was all just because of all the ingenuity. Well, that's true to a certain degree, but look what happened here, okay? 2020, okay, back in March, look what happened right in here, okay? When the Fed really started, this is basically, so we got to a point where the fundamental, we were reopening the economy. So we didn't need all that liquidity in the economy anymore as we started getting, a full year out of it. And look what happened. It was like, well, all this liquidity doesn't have to go into the economy anymore. Let's go into risk assets. What's the hottest risk asset? Boom, there it went. It just took off, okay? Now, here they announced they're pulling the plug on all that liquidity, and look what happens, okay? So right. I guess my point is it pushed it way too high. It's got to come back down to a more realistic level. I think that's going to be more like 15,000. But, again, I'm watching that sideways range, and I'm not ready to get ultra bullish, call it for another down leg quite yet, but it's getting close to something that looks like it happened.
Okay, so that's the chart of Bitcoin. Now, the other thing that I want to ask you, there's these places like Celsius Network or Voyager. Celsius Network reveals 1.2 billion shortfall in bankruptcy filing. You have all these people that own Bitcoin and crypto. that basically cannot use those funds, and those funds, that's probably lost, right? And I remember that you and I were talking about the possibility of this happening. It's very unfortunate. This has nothing to do with the Bitcoin. It doesn't have to do with the Bitcoin chart, but what do you think about that overall sector? And I mean, let's look at Coinbase maybe for maybe the next one. Who knows? Like, what are your thoughts overall with this, man? Because it kind of sucks for all those people that had Bitcoin and crypto or anything else in those places, right?
Yeah, I mean, it is really, really unfortunate because the problem is when you have things that are that, as unregulated as this asset class was, it still is. You get these people that, what was it, that one hedge fund, Three Arrow or Three Arrow, whatever. I mean, these guys, they can't even find these guys. These guys just disappeared. So you get these unscrupulous guys, and sometimes you're worried that, did the woman from Theranos, did she really think they could finally figure it out? She was just trying to, I don't know. I don't know. All I know is that she was lying. At least that seems to be what they proved in court about how they were working on it. And you have people involved in this industry that are hardworking people who know what they're doing, are very good at what they do. But then you get a bunch of other people who, I mean, some of them just got in over their heads and leveraged themselves up too much. But others who are just unscrupulous and were taking people's money and telling them that it was, not only was it safe, it was safer than having it in the bank. And now they can't get it. And it's gone forever. And like you said, it's probably gone forever. And I mean, even with when it came to Bernie Madoff, a lot of these people at least got some of their money back. But it's really, really unfortunate. So I think you want to stay with the mainstream players, and Coinbase. We'll have to see what happens there. I don't know if Jim Chanos is still short. I know he hasn't talked about it at all lately. I know he made a lot of money in shorting the stock, but now with the stock down, I don't know what his position is, but he's, believe me, he's been wrong about stocks. He was wrong about Tesla, but Coinbase, there's a lot more going for Coinbase than we do than a lot of other ones, and I think this one's. But they're reeling, and it's I'm not questioning their integrity. I'm just questioning whether how much longer they can hold out. I just think there's more to go on the downside for the asset class. So all these players are going to have further problems. We haven't heard the end of the. When they say when the tide goes out, we find out who's swimming naked. A lot of people are swimming naked, and it's going to be. I think there's going to be more. We're going to find more people like that before it's over.
And yeah, I mean, I think you saw that thing about that. What happened that some fund that was trying to be liquidated can't be contacted or something like that. Some crazy stuff.
It's a Three Arrow thing. They can't. Their guys. They're. I think it's three managers. They've disappeared. Now, it's like, you imagine when we had some people did some really stupid things in 2007, 2008, but we knew where they were. We can bring them in front of Congress and ask them what the hell happened. These guys, they just disappeared. It's not, at some point there's going to be an unbelievable great buying opportunity, just like there was in the best internet names. I just think we're not there yet.
Right. I guess, and another good thing what's the name of that company? MSTR. What do you think those guys are going to be considering all the? Is that the MicroStrategy? That's the one.
Yeah, MicroStrategy. The thing is, they went far away from their their core business. It was funny. A year ago, I was saying to people, as well, not a full year, but as it started coming down from its high, Bitcoin, and I was asking people, it's like, what are the people who work there? I mean, this is a good company. And it's like they're spending all this money on something that has absolutely nothing to do with their core business. And this is gonna, obviously it's clobbered the stock. Now their average price, again, what for people who don't know, they went out and borrowed about $1 billion just to invest in Bitcoin, and they didn't buy $1 billion to build new technology, to upgrade their technology and their what they offer their customers. They just invested in Bitcoin because they just said the scarcity value. There's all sorts of things that scarcity value, and it's the only, as they said, it's the only one where you can, it's really free from the government. And my comment was, it's like, yeah, that's one of the reasons why the governments aren't going to let it. One of the few things governments have is a control over their currency. So if they think they're just going to let everybody go on cryptos, they're going to lose too much control. And so there was a reason when Facebook said they were going to get into it, they put the hammer down on that right away, because they knew if Facebook got involved, it would catch too much traction too quickly. And this is a problem. So what will happen to this company? Will they go out of business? I don't know. I don't know enough about their core business, but I do know that they they leverage themselves in a major way on an asset that has nothing to do with their core business, and it was an investment. It's not when people leverage themselves because they take out loans because they want to build a new factory because they think their product is fabulous. That's great. There's nothing wrong with that. And when you're just doing it on an unproven commodity, then they got caught up in that whole. They just didn't realize what was going on. That how much the liquidity situation was helping them and it's the same thing with this ARC. She really thinks that it was the innovation only that took all these stocks up. She didn't realize that it was really the Fed's liquidity that pushed most of these stocks higher. And we know what the stock's done. It's down here.
Right. But before we do get into ARC, though, just one question here on Bitcoin. Do you think Bitcoin can bring down the whole market as it is? Because I could be mistaken, but I think that most of the hedge funds and these funds got into it when it was maybe 10, 20, 30,000 or higher, and they really didn't believe in it when it was really small. Do you think that can impact overall portfolios in the market if it goes too low?
It's funny. I don't think that's going to be as big a deal. It's not going to help, certainly. And some people will go out of business, but most of the institutions, it was still a very small part of their portfolio. And so I'm not worried about it becoming, certainly not worried about it becoming a systemic issue, because it just, the important banks and mutual funds and such. Will hedge funds go out of business? There are some already have, obviously. I just don't see it. And it's number one. Number two, a lot of the leverage has been washed out of it. It's just not as important and not as big a market as all those esoteric fixed income instruments were back in 2006, 2007. That all these banks had huge amounts of leverage in, huge amounts of exposure to. So no, I don't think it'll be something that drags down the entire. I think it's the canary in the coal mine that it's signaling that what is happening in the overall system now that all this liquidity is being drained out. It's what we need to do. It's the right thing to do. And people criticize the Fed a lot, but they couldn't leave that liquidity just flowing into the system. It would produce the kind of bubble that once broken or once burst would have created another Great Depression, in my opinion. So it's going to be a painful time, but it's what we need to go through. And I don't think that Bitcoin, it will cause more problems. If it drops to 15,000, it's definitely going to cause more problems. There'll be more forced selling because people can't sell these things. We talked about this last time, is that they'll start selling what they can sell. They'll go back to selling Apple Computer. We made great money on the Apple Computer calls because I saw that when Bitcoin stopped going down at 20,000, people stopped using Apple Computer as a source of funds to meet their margin calls. And so I said, great, let's go in and buy Apple Computer. We made 500% on the Apple calls there. The stock, Apple gone down 10% with no new news. Apple doesn't go down 10% with no new news unless the whole market gets crushed. And so I knew they were using it as a source of cash, and I didn't know it. I felt that was the case, and it worked out beautifully for us. We made some real nice things there. So as usual, I gave you a long-winded answer. Sorry, but the point is that I'm not seeing it as a systemic issue, but it certainly will cause further problems if and when it drops back to, into the mid-teens.
Yeah, quite a time to be alive in the markets, Matt, right now. And yeah. So what are your thoughts about ARC? Do you think she's gonna go bust or what?
No, the thing about ARC is that's good as, at least as far as I know, they don't use leverage. They just go in and buy the stocks. And she was a very smart person. She's a lot of success, and she's become famous in the last 2 years. But she's been doing it a long time, so I'm not gonna bash her on this. We've all been wrong, but I just strongly believe that a big part of a lot of the stocks that she trades were simply the Fed had provided all this liquidity. They had no place to go with it because the economy was already humming. So these banks, how they provide that QE program. They go in, they buy the bonds, buy treasury bonds from the member banks who have to sell them. So these member banks get this money. They turn to put it in the economy. The economy doesn't need it because it's already proving. So they put it into the markets. And then people went in and said, I've got all this liquidity. The Fed's got my back. What do I buy? Well, I'll buy the hot stuff. And so they bought these hot stocks that went way above their underlying fundamentals. And she thought it was the innovation that took them higher, where it was really the liquidity did. And now that the liquidity is gone, the stocks have come down in a serious way. And this is, well, again, so I guess my point is, will they go out of business? Some hedge funds go out because they have so much leverage that they have no choice. They just go out of business. She actually runs a mutual fund. Okay, it's the money comes in. She invests it. She doesn't leverage it. So at some point, all the money may drain out that she'll finally have to feel that she has to close her doors. But this is not one of those things where it's like a long-term capital management 20 years ago, where that she'll have to get all these margin calls and have to liquidate that would cause the market to crash. But I would not be buying this innovation fund because I just think there's nothing wrong with the companies. Their stocks are still too expensive.
Right. And here's what I do like the most about all this that's happening out there in the world, Matt. It's that you always find a way to trade it. So all these topics, all these things, China reopening, ARK, Tesla, Bitcoin. By the way, let's hit up Tesla. But all these things that happen in the markets, you have your eye on it as a trader. I mean, you're 40 years trading. You're a career guy. This is your thing. So I just think it's interesting that not only you can trade this stuff, but people can become more educated, smarter, obviously, about what's really happening out there, to really know what's happening. More importantly, how to profit from it, not just sit on the sidelines, like you say, right? Just going after it.
And so there's some weird opportunities out there, like wheat. I mean, I was the first time I ever traded wheat. Been doing it 40 years. I've certainly followed wheat, but I was like, I don't want to get into trying to trade wheat futures. But then we saw this ETF, said, hey, the options are liquid. Let's give it a try, and it worked out beautifully. So again, I don't know how often I'll trade wheat, but I actually think another opportunity is presenting itself soon. And we may trade it a couple of times and then not trade again for 3 years. Who knows? But there's a lot of things out there that we trade frequently, and like I said or showed earlier, in both directions, like in the XLE and those energy stocks. When you get these big term things get way overbought, sentiment moves, let's take advantage of it. And it's worked out really well so far. And I think it's going to continue to work out. And it's funny because you see, we do these webinars and you talk about, well, next week's going to be a really big week, and you list reasons. But boy, when you have the meat of earnings season in the most highly focused earnings season in long time, at least a decade, there's going to be some volatility out there. There's going to be some great opportunities. And so really and again, earnings season goes past the end of July. So it'll be the next 3 weeks anyway, if not 4, that activities I think is going to be really active, and we're going to be making a lot of plays.
Right. No, definitely interesting there. So Matt, do you want to maybe before we do take maybe some tickers from the chat, do you maybe want to hit up Tesla? I know that's we're definitely going to be asked about it, but
sure, yeah. So if people want to send you some tickers that they want to look at, I'll be more than happy to look at some of them. But of course, Tesla is always a favorite for everybody. Now look at this thing here. And it's like we have done very well trading Tesla this year. Made some real nice plays. Recently, this week I have done very little trading in it for the simple reason that it's kind of in this neutral stance. Look at it. See how it's been trading, and it's a wide range, you can see, but it's kind of been range bound. And we could also say it's a symmetrical triangle because it's been the lows have been slightly moving up, the highs have been slightly moving down. But you can see its RSI chart is very neutral right in the middle, so we don't have a big thing there. And of course, this whole thing with Tesla, this whole thing with Twitter, and this is creating some problems out there. It's certainly, I think the reason why the stock hasn't done much is that the Twitter situation is putting a lid on it. Now that, this lawsuit's taking place, we'll see what happens, how it plays out. But, one of the biggest concerns is that people are like, people love Elon Musk. He's made people a lot of money. He's a brilliant man. He's changing the world in so many different ways. But if he skirts the law, I mean, if he gets out on some sort of a technicality, this is contract law. I just worry that this is going to cause more problems for him. We've been talking a lot about in the chat room. One person was just highlighting how 450 is kind of the level that she would buy it, that she would kind of avoid it until it got to that level. I tend to agree with her. It's a does it fall that far? Maybe not, but I'm worried that this. First of all, I'm worried about the overall market. So if the market goes down, Tesla's going to go down. But this Twitter thing was what they call him an unforced error. He didn't have to get involved with this, but he did, and it's going to cause him some problems and attention time and stuff. And we're hearing a lot about how they're losing market share. Well, that's true, but when you have, as they said on CNBC today, they had 95% market share in every state. Of course, they're going to lose market share. It doesn't mean they can't do well. I think Amazon's been losing market share for years, but they're still a thriving company, although the stock hasn't done that well recently. So my point is that I'm looking for this thing probably to break down, and I just think that it's something you want to be careful about. Can you scalp something for a short-term trade here and there? When it got down here and gets oversold, we'll certainly look for that upside potentials. But right now, I'm looking for the stock to go lower.
All right, good one. And folks on the Zoom chat, throw some tickers on the Zoom chat so that we can. All right, Chad's going nuts there. All right, so let's go with Bank of America.
Well, Bank of America, they report tomorrow. Now, this is what's. Oops, it'll take me a second here. My screen froze up for just a second, but don't worry. There we go. Now, before I pull up the chart, I'm going to pull up the yield curve. And for JP Morgan, stocks got hit today off their poor earnings. Jamie Dimon's an unbelievable CEO. Bank of America is, I know Brian Moynihan personally. I don't pretend to be close to him, but whenever I see him, we chat a little bit. I see him from time to time, and he lives in my town, and very, very, very nice guy. But it was funny because when he took the job over a decade ago, they said he was in way over his head. And last weekend, he was named one of the top 10, or maybe it was 20, but top executives in the country. And I think he was the only bank executive to name that. So this guy does an unbelievable job. So it is a great. Incredibly well-managed company, 2-year, 10-year. But that doesn't mean that the stock is going to do all that, is going to do well near term. And oops, commodity, there we go. This is the yield curve. And what I'm looking at is the 2-year, 10-year spread. Okay, in other words, the yield between, the spread between the 2-year yield, 2-year treasury yield, and the 10-year treasury yield. That is now minus 17. And we have an inverted yield curve. That shows a recession. That also is negative for the bank stocks because banks, they loan out money at the long end, at longer term interest rates, and they pay out money at short term interest rates, to their depositors, their little, nowadays that's not very much, but you can see. But if interest rates go down, if you have the 10-year yield going down below the 2-year yield, they're not making a spread. They're actually losing money. And they're called NIMs, N-I-M, net interest margins. Those are a really core issue for the banks. I mean, it doesn't, believe me, if their net interest margins aren't good, it doesn't mean the bank's going out of business. This is not that kind of, it's not 2008 again, but it does weigh on their earnings. And that's one of the reasons why I'm worried about Bank of America and the others. Even though I'm worried about their stocks. I'm not worried about about JP Morgan and Bank of America. Citigroup and Wells Fargo, they've got their own problems, and they've got new management, so hopefully can help them get out. But boy, Wells Fargo was so poorly managed for so many years at so many levels. But the stock bounced back, but you can see how it's getting oversold, so that's good. But it's making a lower low. The problem is, it already made a lower low than the June low. Technically, I mean, look at this: lower low, lower high, lower low, lower high, lower low, lower high. Nothing but lower highs and lower lows. For me to get, first of all, I want to see the yield curve bounce back. And we're going to have to see this change. Now, It is getting oversold, so could it bounce back soon? I just want to look at, even it's oversold on its weekly RSI chart. But what I'm going to be looking for is see if this stock can break back above its 200-week moving average, which is basically at $33 or just below $33, and actually hold above it. See how it got above it twice but couldn't hold? Let's see how that goes. The stock's getting overbought. It's an incredibly well-managed company, but I just think if we're heading for a recession, that's not great for banks. I think we're actually already in a recession. So they're going to be, but they're very, very inexpensive. Just because something's cheap doesn't mean it's a great buy on a near-term basis. So we're going to have a great opportunity to buy these names at some point this year, or certainly next year. And they're not going to fall like they did, 12 years ago during the crisis. And they're going to be a great shape. I just think it's too early. And we'll see what happens tomorrow with their earnings report. Remember, it's kind of weird, but even when banks report good earnings, their stocks tend to go down. It's the strangest thing. So I'm going to stay away from those, but I am looking for opportunities later this year to buy the names. And like I said, Bank of America and JP Morgan are the best, incredibly well-run, great companies. And if you own them right now, and if you want to dip into them a little bit for long-term holdings, I think it's okay. I mean, look at this. I'll do one more thing here. Look at this. Trading 9 times earnings. I mean, they're still cheap. Dividend yield's not. I mean, it's not great, but it's not bad. It's not bad. A little over 3%. Pay a little bit to wait. But these stocks are cheap. So if you want to buy a little bit here, that's fine. But I think we're going to get a better opportunity at some point later this year.
Right, interesting. And there's a bunch of companies that are going to report earnings, Matt. And I know that you're always, a lot of the members there. I mean, I know. I don't remember who the member was, but I know that some of them made some good money on like Target puts.
Oh yeah.
And you remember that, like some 4,000%, some crazy number. So that's what I mean. Like the members there they're like all like mini Matt Maley, where they all kind of look for these things out there and together as a team. That's nice.
Exactly. There was a here, let me just but this is BlackRock. They report tomorrow, and of course they're the big hedge fund or money manager. Technically they're a hedge fund. But see right here, see where it's right in this area where it's kept bouncing off. It's not really head and shoulders, but see, it's getting this area right in that 575 level. Let's put it down here. And right in that 580 level has provided great support. That's great, but this is what we call is a descending triangle pattern. Let's get rid of these squiggly lines. These colored lines are the moving averages. So I'm going to get rid of those for a second. But look at this, bang, bang. This is what's called a descending triangle pattern, okay? And if their earnings tomorrow, see, it can break a little bit, but that's a key thing when technical analysis. If it breaks a little bit above a resistance level or a little bit below a support level, it's not a big deal. You need a meaningful, those are just head fakes. You want to make sure, wait until you get a meaningful move. But if they report really bad earnings and it breaks below this pattern, that is not going to be good for BlackRock. BlackRock's a key financial institution. So we'll be watching that one. It'll be out before the opening tomorrow. We'll be watching that one very, very carefully. Because descending, you break below the bottom line of a descending triangle pattern, and you can even say that it goes all the way back to here. I mean, you could draw the line even further back. They don't, the two. There you go. See right there. Well, a different color there. Sorry, but you can see how that goes all the way back, goes back even further in time. So my point is that, there we go. I just want to make it here because it's a good chart. Yeah. Okay. But you can see how far back it goes. So these are the types of things that boy, you break below that. Again, it's getting oversold, but not oversold, not really oversold at all. So we'll be keeping a close eye on this one tomorrow. Yeah, so that's the long answer to that. Sorry.
All right, and then we have a spy from Mary from the Zoom chat.
FIVE?
Spied, SPY.
Oh, SPY. I'm sorry. Spies. I'm sorry. Of course, the S&P 500. Okay. So this is the ETF for the S&P 500 index. And let's just look at it now. Now, what we have here, this is key. And everybody's talking about, oh, it's great that the market bounced strongly off the lows. I'm going to do it here. strongly off the lows each of the last 2 days, but it's still down. I mean, the market's still down. Look at SPY. One of the things we talk about education, is we think support. One of the kind of basic things is lower highs and lower lows, right? Lower high. I'm sorry, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, what happened here? We almost made a higher high. Didn't quite make it. That was right at 3,900 on the S&P 500 index, and basically 390 on thing. But it wasn't. That's not just the issue there. Very frequently, whenever a key support level is broken to the downside, it becomes that old support level becomes new resistance, and vice versa. New resistance can become old resistance become new support. Well, here's a situation where old support, as I mentioned, was there at those May lows. Let me just shoot my thing's freezing up a little bit, but anyway, you can see right. Okay, here we go. There, perfect. Okay, now you see this line right here. See how we got back up? We couldn't make a higher high, but it's not just a higher high. It is the old support level, new resistance. We failed it there. We failed it again. So now we're flirting with going back over. We drop below those early or late June, early July lows on the S&P, on the SPY, which on a closing basis was, bang, 377.25. We closed below that level. That's going to cause some problems, okay? And we look like we're going to do it each of the last 2 days. If it happens, whether it be tomorrow or next week, we break below that level. Again, it'll be showed that a failed breakout, and we're going to roll back over. But that's what we're looking at right now. And the other thing I want to look at, remember I talked about these MACD charts, which gives us a sign of momentum, short-term momentum, that is. And see how it's starting to curl back over? It hasn't crossed yet, but if we get a negative cross there, that's going to be a problem. See, you had a negative cross here, market sold off hard. Negative cross here. Somebody talking to me? Okay, market sold off hard. Okay, if we get another negative cross at another low, see, we had it there. This was a lower cross. It looks like it would take place at another lower level, a third lower high. This means we're breaking. I think we're going to break down below those June lows. I think we're going to do that anyway, as I think I've kind of indicated. But see how we try to look at a number of different things to tell us what's going on in the marketplace. And the other thing too is that looking at the RSI chart, and I'll do one more thing here. I don't want to time is it okay? See how it's very neutral. You see, it sold off here, became very oversold. Well, it's worked off this bounce back, which is losing steam. It means it's no longer oversold. Okay, so I'm worried. I'm worried about this this right here. Each of the last 2 days has been able to bounce back. If it doesn't happen this time, it's going to be a problem. And so we'll be looking at MACD charts. We're looking at RSI charts. We're looking at earnings. We're looking at a lot of things, but that's what makes it enjoyable and exciting. And but I hope that gives you an answer that the downside, the risk to the downside is growing just as we're moving into this earnings season.
Right, and I mean you're right, man. That's why it's so cool to be there with you all day and I'm excited about the stocks. A lot of people are really excited about you covering stocks in the chat room because it can help people kind of look at the long term as well, like buying and holding. Ultimately, you're a strategist and a trader. Like you're the best of both worlds. So I guess you're adding that extra value. And this meeting on Tuesday, I mean, it was really just a quick 10-minute thing, and Matt out of pocket decided to give you guys more time and attention to the chat members. I want you guys to know that came out of Matt. So the chat room continues improving. Matt continues to add more value to the chat room as we go, especially as times get weirder, you could say. Mary says thanks. So yeah, and this is a stock, an interesting one, Matt. Check out Affirm, AFRM.
Okay, it's funny because we get asked on this stock almost every time. But look at this thing now. Okay, and this is finally starting to look enticing, but it's got to break. And let me just get rid of some of the things here. This yellow line is the 50-day moving average. Got right up to it there, failed. Got right up to it there, got slightly above it, failed. Got right just below it, failed. Got right to it there, failed. Got right to it there, it hasn't failed. So the fact that it keeps bouncing along that thing tells me it's probably going to break above that 50-day moving average, which is at $22.40 right now. Okay. Yeah, I would also take it out of a sideways range that's been in for a couple of weeks. But this is what I'm looking for. Now, the RSI chart is rather neutral, but I think this is a good long-term company. So it's obviously again, it's one of these things that everybody thought was going to change the world overnight because because people see what's going on in the thing, but they don't realize that, again, they think that the stock's going up, so therefore it must be willing. It's definitely going to change the world overnight, right? Well, actually, it was going up a lot, not because it's going to change the world overnight, but because there's all this liquidity in the system. Now it comes back down to earth. It's still, like all those, so like the internet companies that succeeded, this one's going to succeed. So again, the answer there, we break above the 50-day moving average in any kind of meaningful way, this stock is going to run. So I'm not quite there yet to pull the trigger, but it looks like it's one that has some potential.
Right, interesting there. So now, now just give us, in this case, a stock maybe that you are looking at, Matt, maybe a stock that maybe you are looking at in the chat room, or something that you guys maybe recently were looking at, to show the folks a little bit what you're doing there in the chat.
Right. Well, there's a lot of different things. Well, let's just look at a couple here. Well, I talked about the wheat, so I'm going to talk about, okay, a couple of different ones, and then I know we've been going almost 2 hours, so we got to we'll cut down a bit here. But let's see here. What am I doing? We'll look at copper. See how copper? Everybody's copper's come down. It means the world's coming to an end. It's so funny how they say copper's coming down, which is negative for the economy. And yet they say it's bullish. I can't, but see how oversold this thing is getting. This has gotten very, very, so this is the RSI chart. Let's get rid of those weekly volumes. Cool. Okay, now let's look at how oversold it is on a weekly basis. Bang. See how oversold the thing is getting? Very, very oversold, getting below its 200-week moving average. So I think it's getting ready to bounce. So I'm going to look at Freeport Copper and Gold, FCX. We've been talking about this. We're not quite yet ready to pull the trigger. And again, this is going to be a short-term trade because we do have some issues to worry about there. But also, and again, another thing, I'm looking at the dollar. The dollar is getting extremely overbought. Is it going higher eventually? Probably, but it's getting ripe for a pullback soon. When the dollar goes down, commodities tend to go up. So if the dollar comes down, the oversold copper should bounce. FCX should bounce nicely. So that's one we're looking at. I also like Chevron. It's just a very simple stock. And I've liked this for a long time. But again, look at trading at less than 8 times earnings, a bigger than 4% dividend yield. Okay. So this one, again, I'm not quite ready to pull the trigger because I think the catalyst will be in the oil when the earnings come out. But see how oversold the stock is getting on a short-term basis? Let's look at its weekly chart. Boom. It's not quite there yet, but it's testing its 50-week moving average, which it bounced off of several times last year. I think it's going to bounce off that level again. Bang, bang. Get all this. See how that 50-week moving average provided great support. Right. I think it's going to do it again. So these are some of the names we're looking at.
Good stuff, man. Well, look, Matt, I definitely want to, give you a big shout out, man, for always coming through here, for the chat members, for everybody here. These sessions are great. I always learn a lot. I know everybody else does. And it's just good, for all of us to come together, right, as a group, as a community that we are in the Stock Picks Inner Circle chat room. Any closing remarks on your end on why the folks here not should should join the chat room, but trade with us and really be part of something bigger like we have here?
Well, I just think a couple of things. The volatility is there, and so it's going to continue to be there. And as one person said earlier, is that trading alone is so hard, and you can bounce things off people, not just me, but other people in the chat room. What do you think about this? And sometimes I say, I don't really know the stock. I can't be much help on this one. Or I'll look at the chart, but I don't know anything about the fundamentals of the company. You can't know all the stocks. Somebody else will chime in and say, oh, I like this, or I've seen that. For me, so that's really helpful, where you can have some crutches to fall back on. But the most important thing is that we are in this time frame where the markets are incredibly volatile. They're going to continue to be volatile. The Fed is trying to rein in an inflation that is supply induced. That's going to be very difficult. It's going to create a lot of headwinds. We get bear market rallies along the way, which we have gotten. We're just, I think, coming to the end of a second one, and we're going to be able, because we have the tools, we're going to be able to benefit from it once again. And I think the next couple of weeks in particular are going to be very, very interesting in the overall market, but also for individual names with all these earnings coming out. I think a lot of earnings estimates are going to have to come down, and where there's other areas like energy stocks where they're actually going to rally. Again, if you have good earnings out of a stock that's really overbought, well, what's its upside? Not that much, or less. What's earnings? Really good earnings out of stock that's oversold, like a lot of these energy stocks are, gives you a lot of upside. So these are the things that we try to point out to each other and play in as much as possible. And it's turned into some really big trades for us. We've been able to take advantage of it so far this year, and I think it's going to continue for many weeks, and actually I think for many months and even a year or more. So it's the tools are there. Let's take advantage of it, so that when the bottom does come, not only do we have the money to take advantage of it, but we have the confidence to take advantage of it, where everybody else is saying they have zero confidence in the stock market and they're selling when everybody else, when they should be buying, just like Warren Buffett's been doing for 70 years.
Okay. All right. Well, there you go, Matt. Chief Market Strategist at Miller Tabak, lead trader, mentor, educator, and best friend at Stock Picks Inner Circle Chat Room. Matt Maley, thanks a lot, my brother.
Nice, Maley. Thanks, and we will be talking to you in the chat room. Good luck with everything. It's going to be a wild couple of weeks going forward. It's going to be a lot of fun, really exciting, and I think very profitable. Have a great one. We'll talk to you soon.
All right. Thanks a lot, Matt. And stick around. I'm going to show you the chat room. I'm showing you some of the trades from Matt, which is what we're going to be going over here. For all you guys that joined, really important. Make sure that you watch this. Mary, what's up? Thanks a lot for being here. I know you never miss these sessions with Matt. So basically, all right, let's get down into the trenches, folks. All right. Matt was here. I showed you what's up, right? You see what he's all about. He loves stocks. This is his thing, right? This is his lane. This is what he's been doing for 40 years in Wall Street, at the highest level that you can imagine, right? Solomon Brothers, Merrill Lynch, and Miller Tabak, right? A lot of you guys already see him on CNBC, Bloomberg, all that stuff. And he goes there for like maybe 3 minutes. We were with Matt right now, probably about 2 hours, right? This thing was only supposed to go for 1 hour. So everything above the 1 hour mark is basically just Matt being, cordial, right? Being generous with his time. So he goes above and beyond for the chat members. That's really nothing new here, but if you're new, you're probably just seeing this there. So good question. I'm going to post the link in the chat for y'all to join. And remember that if you join today before midnight, right, you get the deal. You need to join before midnight. You get the laptop. You get 2 bonus items that I included as a courtesy. 2 bonus items. Okay, you'll see them. And this is on the house, don't worry. And you can use that link we have there. So Daniel, let me show you this thing really quick, man, so that you can see how the chat room works. You already have access since you joined, but basically you have 2 channels here. You have one of them is Inner Circle Chat, and that is basically where everybody is posting their, Matt is like talking with the members back and forth. Any questions? It's basically a 2-way road there. You guys talk as a community with Matt, all that stuff. And that's called the Inner Circle Chat, okay? It's the one you're seeing here where James is talking. What's going on, James? I think this is James Donahue, right? I think James is watching right now. I think so. I think I saw him earlier. We got JPV and Louis B. So, I mean, these are pretty much members from the chat room. And, you can go in there and it's a great community. I'll tell you, everybody has fun. jokes around, talks about trades, share trades, research. It's a good community. So then you have the other channel. That's Matt's important messages. Only Matt is able to post in this chat. The reason is because we want Matt's trades and Matt's market commentary to be separate and very easy to follow. We want you to be able to come in here and find the trade right away, not have to scroll and try to find it and piece the whole thing together. Here you have everything with timestamps so that you know exactly when Matt got in, the ticker he bought, the strike price, expiration. It cannot be any more simple. Keep in mind, we're doing very simple trades, very simple trades. So if you're new in options, this is pretty much your lane, right? This is what you want to stick to, the simple stuff. And keep in mind, Matt Maley has been, the chat room's been open, I believe, since October of last year, around there. It has about 10 months, I'd say. But Matt's been doing pretty well, chat members there as well. So Gordon, absolutely, man. You can see the contracts here. So let me zoom in a little bit there. So this is pretty much how you're going to see the type of format, right? Matt will tell you if it's a small position as he starts adding on to it. So it could be a small position, and then he'll tell you he's going in small, and then he's adding more to the position, becoming a medium-sized position, and then, you know, a large position as such, and then on the same way backwards. Okay, I'm cutting profits, I'm taking 50% off the table, and I'm leaving the rest, you know, just to ride out clean. So Matt will do that. Matt will do that, and he will post it there in the chat. He'll say, you know, I'm selling half, that sort of stuff. So the sessions as well are on Tuesdays. The chat members have full access to that. You also get the laptop. It's until midnight. And there's a 7-day money back guarantee. Okay. So it literally is risk-free for you to try it, because if you don't like it, you get all your money back, 100% of it, right? Even in times of recession, we are this confident to give you a 7-day money back guarantee. All right. And just reach out, right? We have a great community there. We want you guys to be a part of it. So at this point, folks, just make sure to email if you have questions about the chat room, about how to join, or if you have questions right now. I think it would be a great moment to ask it. Don't wait to call, you know, because we can knock it out right here. We can answer questions here right now if you want, if you guys have questions. If not, you can just reach out. Extra, I hope I can see you there, man. Reach out. Chad, do we need another subscription to Benzinga? No, not really. This is a separate, standalone, you know, trading thing with Matt, basically, right? Where it's live trading the whole day, Monday to Friday, and you know, anybody can join. Anybody from any part of the world can join. It's very simple. All you have to do is mirror what Matt is doing. So if Matt is buying calls, and he'll tell you exactly which call he's buying, the strike price, expiration. He's always going to give you the exact thing. It's always going to be specific. So if you guys have any other questions, reach out. I'll be happy to help you out here. And more importantly, guys, trade responsibly. I look forward to seeing you guys tomorrow in the chat room. Have a great day, and thanks for watching, guys.